This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back to Invest Like a Pro. This is Joe Rabil. I want to give you a stock market update, and I am going to talk about sentiment a little bit more because I had a question about the sentiment numbers and how I use them. So I'm going to get into a little bit of more detail than I typically do on that. And also a trade setup took place today that I thought was worth covering. Now, I don't intraday trade. I don't really have the time. In fact, when this trade was taking place, I couldn't take advantage of the trade because I was on a Zoom call with an institutional client. But I do think it's worth looking at these patterns. And this is right out of my book, the pattern that developed. And so I would like some feedback in the comment area if anyone saw this trade. For anyone who's read my book and or taken my course or is a subscriber, was listening to what I said last week, you know that there was a decent amount of support underneath, and we got this set up, and it was basically an hourly 10-minute. Most guys don't trade intraday, but for any of you that do, I'd be curious to know if you saw this trade and took advantage of it. So let's go ahead and look at this. Actually, just briefly, if you are interested in getting started and learning more about my methodology, I would suggest starting with the book. You can go to rabilstockresearch.com/book. I'm offering at a discount right now in an ebook format. And I think it'll give you a real good idea of how to look at the market in multiple time frames, both trend and momentum. All right, let's go ahead and get into this now. Okay, as always, we're going to start with the sentiment, but today I'm going to give a little bit more detail. Now, last week I had this over here in the neutral camp, but on the far left, like leaning towards the positive. They came down again. The bulls dropped again down to 42%. And the difference between the bulls and the bears is at 18%. So let me just explain. So I use the Investors Intelligence Sentiment Number. Now, this goes back 30 years. I know those guys personally, the Investors Intelligence guys. In fact, they were clients of mine for a number of years. And so I've really gotten to know this indicator really well, and something you trust. You just have to have an indicator that you trust and you have some history with. Now, you can take whatever sentiment number you want and apply it like I'm doing. I'm just using the one that I'm comfortable with. And so what I've done here is on the chart, I'm actually showing the difference between the bulls and the bears. I'm just showing, like, recently at the peak we had at the end of in August. It was actually at the beginning of August. We were at plus 39%, right? We had 39% more bulls than bears, and I think the bulls were up very close to 60. I think they were in the 50s, high 50s, something like that. Now, what I would tell you is that you could almost look at it like an overbought, oversold oscillator, and say, if we get over 30, if we're plus 30 or more, you're getting into a little bit more of like a danger zone. Okay. So back here, really for the whole summer, it started in the summer. It was right around July, August, something like that. We were at plus 40, over 40. Okay. For this whole period here. And it's not like the moment it gets plus 40 or it's at plus 35 or 39 or anything like that, I'm saying get out. All right. That's not how you use the indicator. It's more of a backdrop. I call it a secondary indicator. We want to know where they're situated, whether they're bullish or bearish. And that way it can help us identify really good opportunities and know if we get a topping pattern, which we did here, where the volatility skyrockets and momentum dies out and we get a break of the trend decisively to start 2022, we know it's probably something more meaningful, right? Because the bulls are up at like 45% or something like that, or the difference between the two is at around 45%. So if we look at what's taken place recently, at the low, there were two bottoms in 2022. And the first one, we had negative 19%. The difference between the two was at negative 18%. I mean, that anytime you're under zero, it's really they're very bearish. Okay, when you have more bears than bulls, it's very hard to get it to that point. You have to have a pretty strong decline to get it to that point. but we were at negative 18 here. And then look at this rally. Now, it's only plus 18. I mean, if you're comparing it to this, it doesn't sound like it's that high. But if you look at it, it went from negative 18 to plus 18, okay? That's a pretty substantial increase. And look at what happened to the overbought, oversold oscillator. So we get down here and we get divergence in the RSI indicator and we have negative 18%. I mean, that's a pretty good buy signal. Even if it's a short to intermediate term swing, it's something we want to be on the lookout for. And then we get overbought here. We're up at plus 18. Now, at that time, we were actually, at this point, we were getting signs that the daily was actually showing improvement. So you might have waited for this week. It wasn't like you were doing a trade here, but the moment this started to turn down, we knew we were probably headed back down again. And then you get to a new low and you get negative 19%. I mean, that's a pretty substantial amount of bears and versus the bulls. Absolutely no bulls. And then look at the way this played out. You see how we got a little divergent at the bottom again in this RSI, and then it turns to another good signal here. Now, we had a period where we didn't get to any extremes. We had a pretty good rally from negative 19 to negative 18, then it pulled back. And again, it went from plus 18 to plus 11. It didn't quite, I think if this would have dropped one more week and this would have dropped one more week, we would have had a pretty good signal there, right? Then we move up and we're trending pretty good with good momentum and we get up to like plus 39%. Now, again, I say at 40 or more, you want to get defensive. At plus 30, you start to think, you start to think there's a little bit more risk out there. Okay. And then, but the way this played out is we got overbought and then we pulled back and we met another new high and we had a divergence. So we had a divergence signal here as this was going to new high and these were so both of these were negative at this point. All right. When we were up in this region, these were both negative. Okay. Just like down here, these were both positive. All right. So we want to just keep an eye on this. So right now I've got both of these at positive. It's probably a little aggressive, but why am I doing that? Because we're coming into support. I'm going to give you all the reasons why, again, as I did last week, all the things lining up that this is a decent level here. Now let's go to the next area, which is volatility, because if you notice what's going on, we're getting this oversold reading. I mean, we're at 26% on the RSI 5. And by the way, the RSI 20 is right around the 50 level. So pretty impressive how that's holding up. But look at the volatility. There's no increase in volatility. Even though we've had an ABC decline, it's not causing the weekly ATR to move up. So based on that, I have to be more inclined to believe that support is going to hold, at least for now, instead of just falling precipitously. Now, crash is always a possibility, all right? But I call it very slim. It's a very low probability, okay? I mean, it's a possibility, a small possibility. It's not a high probability. And I don't play high probabilities. Now, if I'm going to do that, I'm going to buy some like out of the money puts and not put a lot of money down and say, I'm just protecting myself just in case things get out of hand to the downside. And one thing that is a little disturbing is that we're oversold and we're not able to bounce. So the fact that that's the case, maybe you want to put out some SPY puts for very cheap, right? Don't put a lot of money in them, but if the market gets, crushed, it'll make up for some of your losses and you'll make some pretty good money to the downside. Certainly if it crashes, you'll make a lot of money. But I'm not suggesting that as a high probability play. I'm just saying if you want to do that from a defensive standpoint. Now, when we look at this volatility, we're actually negative when it comes to the daily because this is rising above its moving average. We have an increase in volatility on the daily chart. We do not have that happening on the weekly chart. So when I look at it in these terms, I could see the volatility increasing. I could see this maybe spilling over into the weekly potentially. But in the near term, it just seems like this thing wants to bounce a little bit, and we've gotten oversold. So let's go ahead and move into the trend and momentum because I do want to cover this trade setup. Okay, we've come into, I don't want to do too much, so we're coming closer to the 18-month. We're not quite there. The MACD is holding here, and we are setting up a pinch play on the monthly chart. There's no trigger. There's nothing. It's just a setup that's potentially developing. And the 18 is flat. It's not rising on the monthly chart. But look, we've come into, if you take the low from here to here, we're at the 38% retracement. If you take from here to here, we're at the 50% retracement. That coincides with this here, right? This move here coming across a 1, 2, 3 reversal level, which is where we are pretty much tested. We're also sitting on the 200-day or the 40-week. I look at a 40-week moving average, correct? And then we want to also understand that even though this is all taking place, this could just be a short-term rally. I know we're getting this RSI oversold signal, and it could cause a short-term rally, and it probably will, but we've got this, we're kind of fighting this. We're kind of fighting the fact that the DI line, negative DI, has crossed above the green, and we're also fighting the fact that the 18 has rolled over. And then if we go to the daily chart, we're fighting the fact that we have a 1, 2, 3 reversal taking place that took place on the daily chart that has had some follow-through. Now, look at what the ADX is doing on this time frame. It's not only above 25, but it's rising and it's showing strength. But I do want to point out what's going on the daily chart, because we've made a move down, a rally up, and another move to the downside, and DI did not confirm. If we take out these two bars to the upside, you should be thinking we're probably due for a rally. Now, this is telling us that the rally probably doesn't have huge legs, but we could get a short-term rally to the upside. Now, I'm starting to put all this together. We've pulled back for a couple months. We're coming back to support at the signal line for MACD. Okay, green is still holding above red on the monthly chart in terms of the DI lines, and we're coming into the retracement back to the 4,200 support, to the 200-day or the 40-week. We're coming into the 50% retracement of the last leg and 38% retracement of the whole move. We got a lot of lining up here, right? So to look for some kind of a rally here makes sense. Now, I'm not talking about making a big bet, but if we start to stick with this hourly, and what we were talking about last week was, the potential trend change that did not happen. It went up and it actually made a lower high, and then it just went to a new low. Zero line reversal, no real strength, right? But look at what happened this time. We went to a new low here, and ADX didn't even get above 25, okay? So now we're drawing in a new trend line, and we actually break the trend line and we come back and test. So let's just zero in on this for a quick second. We break the trend line and we come back and test. Now, during that test, we make a lower high, lower high, lower high, okay? And look at this. You see how this is pinching? So we get a pinch play on this time frame that's taking place right at the 18. Do you see how it's kind of holding the 18 area? And then we actually take out the high of this bar, and that sort of triggers the pinch play on this time frame, okay? And that was this morning. Now, if we go, and I'm going to switch this to a 10-minute, and I'm going to zero in on this. So this morning, we had crossed over, and then we get a pullback, lower high, lower high, lower high, lower high, okay? So look at what's going on. We're getting a 2 time frame pinch play, exactly out of my book, this play, the way this developed. And look at how we have this big red bar that we basically erased. Remember, the midpoint of these bars are really important. The fact that we came all the way up to the high and then pulled back, and then as this was turning up, it was actually holding the low end of that big bar. Do you see that? So this bar was turning. It was really bearish until we got above it and then held the low of it. Now we got to start thinking that they're going to take it out to the upside. So this is all developing, as I was saying when I was on my call, but it'd be interesting to see. So this is the entry here coming up through the pinch level where we took out the first lower high. That was this bar right here. And we put a stop in. That was 90 cents of risk for that trade. All right. And then this was target 1. This was target 2. This was target 3. Now, here's what I want to say. Let me zero in on this. If you're looking at this, I really like either taking, for this type of trade, I like taking either 2 or 3. Like, I kind of try and decide, do I want to make this a 2 times my risk or 3 times my risk? Now, when I look at this trade, I'm looking at this prior high, and I'm saying, all right, 2 times is right below it and 3 times is right above it. Which one do I want? I want the one below it. Easy, easy call, right? So if you're going to do this trade, you're putting it on here, you get to 1-to-1, maybe go ahead and go to a break even and then try and get your 2-to-1. All right? I mean, another way to do it is to piece it out at 1, 2, and if you get to 2, you put the stop at 1, and then if you get to 3, you just take the last piece, or you could just keep trailing through and see if it keeps going. But in this case, when we have a bearish trend and we're trying to reverse and there's not a lot of volume behind this move, there's not a significant amount of ADX strength at this point, play the move below the last peak, not above it. All right. So I just wanted to make sure I covered that. But stay focused on this area. We don't have any definitive action. I'd be out of this trade, by the way. I'd be out of this trade. We have news coming in the morning on, more on jobs and stuff like that. So who knows? The fact that this hasn't been able to really get a rally going is a little dangerous. We've got a problem here, but we're in an area where it shouldn't surprise you to see a rally develop. The strength of the rally is going to determine how big of a move we can make and how good of a bottom we're making. All right. So keep all those things in mind. We'll see you next time.